for giving you your time, but obviously we want to give you as much value and as much knowledge just straight off the top of our heads and give it to you today. So our goal is really to give as much as we can, and hopefully you're going to take as much value away from it as you possibly can. But before we start, obviously we've got this slide. Who are we? There's a lot of awards there that Nathan's obviously been proud enough to take home, and really happy to have that. But what does that mean for you as a first home buyer? Really, it means that you're tapping on the experience that we've both got. We've both owned properties, and we've both been lucky enough to be awarded in the industry. So you get to take that away today, and you get to really tap into that. So Nathan, I guess if you want to give a bit of background on Hunter Galloway and what you do, and on that side.
Yeah, sure. Hey guys, effectively what we do is we help first homeowners like yourself navigate through the loan process. So having experience working with hundreds of first homeowners, we understand.
And been through the process yourself?
Yeah, been through the process myself. We understand the challenges, the concerns, the stress that comes from going through the first homeowner
and
process.
Not just the academic stuff too. So one thing I think you're going to take away from today is a lot of practical tips. There's a lot of things that you're not going to read on a blog. You're not going to read on on a forum. You need to actually go through it, and that's what we've tried to really distill out in this presentation and give you the best, the best of the best. So just a quick information, a general disclaimer there. This is general advice, so we're not giving you personal advice. It's only general in that nature and that sort of stuff. So you can read through the slide there in your own time. Cool, Nathan. So take us through what we're going through today. So from the top.
So we're going to start with more the money in the finance, the dollar and the cents.
Which is important.
The details around, what your costs that are involved, sort of deposits you need, how much you can afford, how much you can borrow. Give you a really rough understanding as to what the banks are looking for initially.
Which has changed a lot. And that's where I think a lot of people go wrong. They read, hey, I read this forum post. I read something on Reddit that said I could do this. Unfortunately, it is changing day to day. And this presentation was literally updated this morning. So you'll be glad to know everything we're talking in here is current, and it's going to get you in the best place in the market. Then Nathan, so we're talking about, this is your favorite part, the property part. So it's actually the buying. So what are we going to step through there and how are we going to help?
Yeah, this is the interesting part. This is the part I really enjoy because it's more talking about, okay, you've got your finances in order. What sort of property are you looking at? What's the process done? Yeah. What's it look like when you find the property? How do you research? How do you find the right property? How do you even negotiate? So we go through more details around the property and the specifics relating to it.
Beautiful. That's where you're going to get a lot of value. So make sure you stick around. And like we said, at the end, we'll get to all your questions. Nathan, so diving right in. So the cost to buy a property, I guess, just step us through at the high level, because this is all the stuff where you can go to online calculators. It tells you all different things. But if I'm a first home buyer buying an existing property, not a brand new one, what do the costs look like? What do I actually have to pay for other than my bank deposit?
Yeah, so for our examples today, we're going to be using Brisbane as the location for the purchase. So if you're buying in Brisbane, for example, 500,000 purchase as a first homeowner, the great thing is your stamp duty is waived. So nil stamp duty up to 500,000. Stamp duty does come in from 500 to 550 at a discounted rate. Anything over, you're paying full freight. So on this example here, we can see a purchase at 500,000. You pay nil stamp duty. You still have some setup fees. So transfer, which is government fees, and then legal fees. So your solicitors are going to help you throughout the process, and they're more going to assist you with searches on the property, making sure there's not a highway going through the middle of the property in the future.
Check development next door.
No developments. Check the rates are paid on time. Things like that. They'll help you with that.
But I guess
turn up to
rule of
settlement.
thumb, this is all going to change depending on the person. How much deposit do I need today? If I'm not buying a brand new home to buy a property, what do you say?
I'd say 8%. So on a 500 purchase, aim for 40,000. Now, if you do pay over that 500 and you do start having stamp duty, 8% plus stamp duty. So if you're over 500, aim for 10% as a very general rule.
So Nathan, take me through obviously the first home buyers grant. There's a lot of stuff on the internet about this. People think they know a lot about this, but what actually is it? And how do you get the first home buyers grant in Queensland today?
As of today, we're looking at 15,000 from the government. That is for a brand new property. So it can be off the plan. It can be constructed. It must have never been lived in before. And it's up to a property value of 750,000. You'll get 15,000.
So 751,000. No bingo.
No bingo. We will help you with the application. So the bank and ourselves take care of all the details. So it's a very easy process. That 15 grand will be ready on settlement.
That's sweet. And then so we've got a bit of an example here. So practically speaking, if you're buying a first home, if it's a brand new home, you potentially need less than 8% deposit. But in this example, I guess let's go through it very quickly. On a $400,000 purchase, what does that look like? How much money do you need there?
Yeah, so if you are taking advantage of the first homeowner's grant, you can use that toward your deposit. So the great thing is in this example, on a 400 purchase, you're roughly going to need about 557 in deposit. Less your grant of $15,000 means you only need about $20,000 out of pocket.
So you can get in quicker, but obviously there's positive and negative. So you're buying a new property. It's like buying a new car. You might be paying a bit of a premium. Look at that. It's case by case. You could be getting a really good deal. So that's good. So Nathan, now I guess the most important thing, and I guess something that people really, it's something they oversee, they just miss completely, is preparing for your first home. So I feel like you watch TV, you see all the media, buying a first home should be as simple as just deciding one day and then going out and buying the next. But really, it's a process. So can you step me through that process, and how do you really get yourself prepared for buying your first home?
Yeah, definitely. I think, when you are looking to get in the market, there's a few things that you can do to really get yourself prepared. So I guess the first is looking at what you can afford, because the bank will give you a number that they'll determine what you can borrow, and that's known as borrowing capacity. That number might be very different to what you actually can afford. So figure out the amount per month you can afford to have ongoing. So let's say it's $2,000 per month. Well, if it's $2,000 per month, that might equate to a $400,000 loan. When you go through and do an assessment with a lender, they might say they'll give you $600,000. So there can be a disparity between what the bank will give you,
so it's really not,
and what you're
not
comfortable
looking
with.
at the maximum the bank's going to give you, but what you're comfortable with affording.
Yeah, and an easy thing to do is look at the past 6 months of your bank account. What have you paid on rent? What have you put away on savings? What's your averages? Are you comfortable with that sort of lifestyle? Can you pay more? Can you pay less? So I'd say first, understand what you can afford, because that will really dictate where you're going to go.
That's a good point, because really you don't want to be put in a situation where you've been used to a certain type of lifestyle, you've sacrificed stuff, you bought a property, and then suddenly your friends are going out, they're going on holidays, and then you feel left behind just because you bought a $600,000 house when you could have had the same lifestyle you had for a $400,000 house. That's a really good point. As a bit of a rule of thumb today, if I'm ages away from buying a house, if I was earning $100,000, like what could I borrow from the banks as a maximum?
Yeah, roughly just a very rough guide. Aim for about 4 to 5 times of your base salary if you have no debts as your maximum borrowing capacity. Now, this will vary even between one lender and the next, which we go through a little bit later.
You're jumping ahead.
You can see a difference, and we'll touch on that as well.
And so the next point you've got there is avoid having open credit cards. So why is that? So why can't I have an afterpay, a credit card, a personal loan, a car loan? What impact does that have?
Couple reasons. The first one is having any open credit cards. The bank, when they assess your application, will base it on the limit of the card facility. So the higher your limit, even if you have a zero balance, it will affect your borrowing capacity. So to give you an idea, if you had a $10,000 credit card limit, it will reduce your borrowing capacity by about $50,000 thereabouts.
Okay.
So if you reduce that card to $1,000, you increase your borrowing capacity. The other one is avoid having too many inquiries. So afterpay, credit cards, personal loans, the more inquiries you have on your credit file, the more chances it can impact your credit score.
And even the type of inquiry. So, credit score is a whole different, we can talk about that for ages, but things like payday loans, if that's on your credit score, that actually impacts your credit score a lot more than a home loan credit inquiry. So all that stuff really adds up, and it builds a picture to the lenders that they can basically decide as soon as you apply for them if they want you or don't want you based on your credit history. The last point there, Nathan, you've got on the slide is really saving. So obviously the more savings you have, the better. Use the 8% of the purchase price as a bit of a guide, because really the more money you've got, the less you borrow, and potentially the cheaper your rates are. But definitely try and accumulate the savings and try and have it all in your bank account there. So I guess the next point, the next slide we've got there is, the things that the banks look for. So Nathan, we've got the 5 C's of credit going from character. So it refers to your reputation. Capacity refers to your income. Collateral refers to like your deposit. Conditions refer to if you're going to buy an owner occupied or an investment property. And common sense is just if you've got a good track record or history. But, practically speaking, Nathan, what's some stuff that you're seeing at the moment that the lenders are looking at and really picking on?
Yeah, so I think something that we're finding quite topical at the moment, the banks are really honing in on, is your ability to meet your ongoing commitment. They call it propensity to repay. It's a big word. More or less it means is, what's your history? If we look at the last 3 months, have you been able to the lending repayments that we're proposing with your savings and reasonable rent. So, for example, if you went for a 400,000 purchase and your mortgage repayments based on the bank calculations were $2,000, the bank's looking to see your ability to pay that $2,000 previously in the last 3 months.
So effectively,
ongoing.
you need to have shown that you were making $2,000 a month in what, rental,
Rent and savings.
And
So
savings,
they want to
yeah.
see your ability to meet that repayment prior to you actually
So you
getting
would
the
say
mortgage.
out of all this stuff, obviously having deposit, having your income, having, good history is important, but having that repayment, that record of repayment and making that same repayment is even more important.
Yeah, show that record of capacity, that propensity to repay. The bank wants to see that you've given it a go and you can demonstrate that you've been able to pay what the commitments will be. On the next slide, we're going to be looking at borrowing capacity. So, Jayden, this is something I mentioned to you before. We can see between one lender and another lender, so lender A to lender G, there's more than $100,000 worth of difference. And that's based on 2 adults, no children, and a combined income of $85,000. So that's another big thing that we look at because one, it's yes, important to look for the lender that's going to be the most competitive.
Yeah, people might want to go the cheapest rate or, they've always banked with a certain lender, but what's the reality?
Yeah, the reality is you may need a higher borrowing capacity. So when we look at a situation, we take everything into account. And in this example, you can see $100,000 difference in borrowing capacity can make a big difference.
Yeah, I suppose the point with this one is just because you've always been with a bank doesn't mean that they're necessarily the right bank. And your bank for your whole life could be in lender G, and they might be telling you the maximum you can get is $326,000. But the reality is brokers like us can help you find those other banks. More to this point.
Yeah, the next one is the mortgage insurance. So we see another differential between the lenders.
This makes a huge difference.
Yeah, and you can see in this example once again, lender A, your mortgage insurance on this scenario, I think it's $600,000 purchase with
10%
minimal deposit. Once again, $6,000 difference in mortgage insurance. So at that stage, if $6,000 is a massive amount in costs, there we calculate all these things to determine which bank is actually the best, not just the rate.
About this as well is it's the power of compounding. So that $6,000 at the time of purchasing, you might be like, all right, that's not a big piece of the pie when I'm looking at $600,000 purchase. But the reality is over 30 years, that $6,000 becomes $30,000 once you're paying interest on that over a 30-year period. So it can be a huge amount that you're paying that just because you chose that lender because you liked, they had a dragon or they were yellow or whatever, isn't necessarily the right thing. So take us through and only touch on this because I think this isn't important right now. It's more important getting the whole process. And then, looking at fixed and variable and that sort of stuff is more important down the line because these rates change every day. So Nathan, what are the types of loans for first home buyers? And, just give us a bit of a summary on that, I guess.
Yeah, definitely. So this is another important consideration we take when we do look at people's situations. So you have options. You can set the loan up as a variable or a fixed rate. At a high level overview, a fixed rate, you lock in the rate for a period of time, anywhere from 1 to 5 years. And it gives you stability, ability to be able to budget. Your set repayments for a period of time. Sometimes with a fixed, you are limited in extra repayments. Variable, well, the pros to that are you've got a bit more flexibility. You can pay down the loan faster. You can have things called offset accounts and a bit more flexibility in making extra repayments and taking them out.
But so Nathan, the old question, do you have a crystal ball? Should I fix my rate? Should I go variable? Is that a consideration or why do you choose each?
It depends on the particular person's circumstance. So that's something that would understand their future goals, what they want to achieve and where they're going. And then it really comes down to the individual. The last thing there, guarantor loans. I think guarantor loans are great. However, probably more of a last resort situation because we do leverage equity in mum and dad's property by putting a second mortgage on the property.
So effectively, you don't need a deposit, but you need to have parents with properties and there's different criteria there that only meets a very narrow band of people. So what are some questions to think about when I'm choosing my lender? Obviously we've gone through borrowing capacity. We've looked at actually if they'll give me the loan. We've looked at the cost beyond just the cheapest interest rate. But what's some other stuff you think you need to consider, Nathan, before you go, yep, I'm going ahead with lender C?
Yeah, I think we talked about it before. Understand your goals. So what are you trying to achieve? Are you looking to lock it in for a set period of time? Are you wanting to pay it off ASAP?
Is it going to be an investment property in a few years?
Exactly right. What are your circumstances? Do you have a very difficult income position where a lot of lenders are going to find it hard to understand?
Yeah, so one thing we find, it's even to certain job types. So if you're a shift worker, if you're a nurse, some banks love that. Some banks won't do your deal. So it's important sort of understanding that and what your goals are. It's looking at what features are important for you. So if you want really good internet banking, if you want a branch, even that stuff sort of goes into it, and it's something that we take people through and make sure that the bank's going to meet their goals, and really is it going to fit in with you today, but more importantly, is it going to fit in with you into the future. So what are some mistakes, Nathan? It's important to cover this stuff, and I've made these exact same mistakes myself. I fixed a rate at a time when I fixed a rate actually over a 3-year period at a time when I was pretty certain I was going to sell the property within 18 months, and I did, and I paid break costs. So what are some stuff that you see here, some common mistakes that people make when they're buying their first home?
Yeah, I think the first one there, not getting pre-approved and missing out. For those of you that don't know, a pre-approval is more or less going to a bank. They'll assess your position and say, yes, you're good to go, should you find the right property within 3 months. Pre-approvals are very powerful. They give you confidence. So having that ready, if you know you're going to buy within the next 3 months, is critical. I think you mentioned it before, having an incorrect structure, so fixing in at the wrong time, that can be quite costly, especially if you come into a windfall.
Cost me $4,000. So
yeah, so massive amount. Or even with a fixed rate, if you, let's say you get a massive inheritance, well, you can be limited to paying $10,000 in extra payments per year. So getting the right structure is in critical, I think. I guess understanding your future lending plans and what that looks like, and really just making sure that everything you do today is aligned for the longer term.
No, that's good. And the last point there, I think, which we've covered really well, is that just choosing it because it's got a juicy, cheap rate, but not necessarily taking into consideration the additional cost of that, and I think it really costs you over the long term. So I guess you probably already touched on this a bit more, but rounding off on the pre-approval piece, Nathan. So when do you need it and how do you use it, I guess?
Yeah, pre-approval, once again, as I said before, if you're looking to do something within 90 days, you get your application assessed by the bank. They'll look at your full situation and make sure that you're good to go. It's only subject to finding the right property. So what that means is once you're pre-approved, you don't have to think about your finances again. You've got a clear stretch of 90 days to look around, find the property that's going to suit your circumstances and suit your plans, and focus on that and that alone. Once you find the property, you just hand through the contract to sale.
Now, I like that, your recommendation as a pre-approval is you can make better offers, because in a competitive market like we're finding in Brisbane at the moment, it means that you don't need to put on 21 days, you don't need to put on 30 days subject to finance. You can go 7, you can go 5, because you already know your finances there.
Yeah, we encourage people to be competitive on their terms, especially now that we're in a bit of a competitive environment, to mean that you can win a property on terms rather than just price. So it can actually save you some costs initially on the purchase price.
That's a good point. And so some mistakes that people make with pre-approval. So once I've got that piece of paper, does it mean I can just go out and buy a property for whatever I want? What are some issues here, Nathan?
I think firstly, you've got to be careful about the type of property you're purchasing. So if you're looking at a 1-bedroom, 30 square meter,
without a kitchen and no bathroom.
Apartment in the city, that's something that's not going to be suitable. So always check with your lender or broker on the properties you're looking at. If you're looking at houses, 3-bed, 2-bath, it's going to be fine.
If you know that at the beginning, that's fine. You need to have that conversation early on, because certain lenders are happy with that. So you just need to know that. I think that also, the pre-approval, although it basically gives you free range to go get the property, it's still not a final approval, which we'll go through in a minute. So you can still put offers out there, but you should still do it subject to finance, because it's still not an unconditional approval, and banks can still say, no, they don't like that property.
Yeah, so they can still change their mind effectively at any stage.
And really the last point there is, buying an overvalued property. So we saw it happen in Sydney a little bit, where people are at the peak of the market paying even more for those properties. So it's worth doing your research, and we've got some tools on that later on that we can cover on to help you to make sure you're not overpaying rather. So the formal loan approval. So Nathan, I've gone out, I've got my pre-approval, I've found my home, I've put an offer on there, my offer's been accepted. What do I do now?
It's extremely simple. As long as you're pre-approved, all you have to do is hand us a contract to sale. We'll send a valuer out there, check out the property. Generally, approval is done within about 7 days. So it's a pretty quick and easy process. Pending how long your pre-approval's been, if you're at the end or close to your 3-month period, we may need updated payslips. So just keep that in mind. How far along you are, the longer it takes from a pre-approval standpoint and getting closer to that 90-day mark, we might need to reassess the situation.
And probably a tip for the young players out there, it's something that you might find quite surprising, but at this point, we actually find a lot of people start looking at changing jobs or taking holidays. Don't. Wait till you've moved in. Wait till everything's settled. Then you can think about that sort of stuff. Now's not the time to be changing things.
Yeah, it's surprising how many people take holidays when they purchase a property. It's just one of those.
You might be shaking your head too, but it happens.
Yeah. So I guess the next one is once the loan's approved, the next steps are pretty simple. The bank will issue formal loan contracts that will be signed. In Brisbane, once again, they need to be witnessed by a justice of the peace. So just remember that one to give yourself a bit of time. The bank usually needs about 1 to 2 weeks for the loan contract so they can review it. So you want to try and get those loan contracts pretty swiftly.
And then settlement. So from the time you basically sign the contract to the time you settle in Queensland, it's usually about 30 days, 30 to 45 days. So what happens around here, Nathan?
Yeah, generally we're seeing about 30 days. So your solicitor is the one that attends the settlement. So they'll make sure the funds are together. They'll probably ask you to move the rest of your deposit into their trust account or into the bank that you've selected account. And they'll attend settlement. You don't need to be there. It'll all happen on the day. And in the afternoon, you'll get the keys. So most settlements are usually 2, 3, 4 o'clock in the afternoon. Once it's done, you'll get a call from your solicitor and you can go to the agent's office and pick up the keys and move in pretty much the next day.
You've got a mortgage. Congrats.
Yeah.
So, Nathan, I guess what makes a good broker and what are some questions? Because there's 15,000 brokers in Australia, right? How do you know you've got a good one? What are some questions to ask?
Yeah, I think it's all about don't be afraid to ask questions. And more questions, the better. First is understand what their experience is. What have they done previously to what they're doing? Were they a baker? Were they a candle maker? What were they doing? Was what they were doing in line with the industry?
I always ask, and it's like financial planners as well. Have they bought before? Have they been through the process? Do they own property? Because if they've been a mechanic and then they become a broker and haven't owned property before, you just wonder if they've got enough experience, depth of knowledge in the field on that.
Also, what happens if they're a one-man band and it's just them and they get sick? Who's going to take over their files whilst they're away? Do they have support? Do they have admin? So all these things are great to understand because it gives you an idea if something were to happen, they have, or even if they've got annual leave coming up. All those things will, because in that 30 days, you will dead set reliant on that person to deliver. So it's important to get that right.
Another point we've got there is, who do they help? So do they deal with self-employed people? Do they deal with a lot of doctors? Do they actually understand how first home buyers go through? Do they know, if they've got recent examples, they've got recent customers that have helped in that situation? Because you want to make sure that they know what you're going through because it is stressful. It is a hard time. It is really hands-on and you're not necessarily going to be an expert in it. So you need someone to be able to lean on and help out with that.
Yeah. I mean, understanding what happens once a loan settles as well. So what their processes are from a post-settlement point of view is important. And also understanding whom is their aggregator. So each broker has an aggregator, which is the middleman between them and the banks. And understanding who they are, who it's owned by, will give you a good idea as to is there any conflicts in interest there. It's important as well. Every broker needs to be qualified and also a member of an industry organization. So feel free to ask them which industry organization they're with, and that will hopefully get you on the right path.
And I guess just touching on why Hunter Galloway, Nathan, why use us over other brokers?
Yeah, what we do is we, as I said before, help people navigate through the loan process. So I've got a team of experts that are here throughout the process. We specialize in assisting first homeowners, and we've helped a heap of them. So we understand the pitfalls, the challenges, the stresses that you go through. We're happy to handhold. We're happy to be there and talk to you about the contract before you make an offer. We're really there on the buyer's side every step of the way. we will do all the paperwork and initial assessments upfront before the client actually comes in the office. So we'll do all the research. So when we're there sitting down with the client, we can have a quality conversation about what they're looking to achieve. All the negotiations, everything's done in the background. So when we sit down, it's a quality conversation.
And I think it's as simple as looking at the reviews on Google. There's over 100 on there. A lot of them are first home buyers. We really specialize in this market. So if you need help at any stage of the process, just get in touch. But anyway, and there's a couple of our lenders anyway, how we can help. Obviously, all the major banks, some small banks. So we've got a big variety of lenders there. So let's move on to the second stage of the webinar and talking about purchasing the property. So this is the part, Nathan, that I know you're very passionate about. I know you're very good at. And I'm excited to be able to be, doing this in the webinar in this format because it's something that you wouldn't normally sort of share this openly. So I guess taking a step back, let's look at why you're purchasing the property. So this is something I know you go through with people initially, Nathan, to kind of get a barometer on what they're looking at. If they're looking at buying an investment property, but they're looking at purchasing a huge family home, do those things kind of mesh up? And, if they're looking at, again, as an investment property to invest, but they're thinking about it to live in, does that make sense? So what are some questions, to consider before you even start the buying process?
Yeah, I think it's about understanding what your goals are first. So if you're looking to buy your first home, are you tired of renting? Are you sick of rent money being dead money? Do you have a lease coming up? So what are the motivating factors that you're looking to move out for? Are you looking to buy your first home that's a stepping stone, the property that will be a future investment property? Do you have a neighbor that's really getting on your nerves that you just need to move on from? Are you living with your parents? So I think the first question before you start buying is, what's your motivation? Why are you looking to do what you're doing? And then get really specific as to what you want. Because if you go very vague, I want a unit, I want a house, I want this, I want that, you're going to look
beachfront property.
Yeah, I was a prime example of this. When I first started looking for my first home, I went from wanting to be in Albany Creek to wanting to be in Ashgrove. This is all north side of Brisbane, by the way, to wanting to be here, there, and everywhere. I want a house, I want a unit, I want this, I want that. It took me over 12 months to realize that I need to be specific. I need to have 2 suburbs I want. I need to know what type of property I'm after, a house or a unit, and how many bedrooms. Once I did that, boom, it happened straight away. So I think understand why you're looking to borrow and why you're looking to buy, and then try and get granular as to what you're after.
So I guess, this slide goes through it. So what can you buy? So really you've got 3 options. You've got a house, a townhouse, and an apartment, or you can build. So it goes back to Nathan's point there. Really, you've got to kind of look at yourself and see what you want to do. If you're going to build a house, where you're going to live during that time. If you're going to buy an apartment and you've got a family, does that make sense? So it's really kind of thinking those steps through and moving through that. Then the next one along, which Nathan, like you said, is where should you buy? So what are some considerations around that to really work out where you should buy?
I think once you've determined your borrowing amount that you're after, and we talked about it before, coming up with a budget that you're comfortable with repaying, looking in areas that you can afford is critical. There's no point looking for a house in Paddington when the average price is $1 million and your budget's only 400, because it'll never happen. So it's about being realistic. Understand the location you want you and your family to be in. Are there schools? Are there markets and shops around? Get in an area that you can see has growth potential, or at least a potential for you and your family to stay.
Well, and it's, I was lucky enough, I interviewed Peter Switzer he's got a TV show and he's an economist a couple of years ago, and he always said it's all about the next suburb along. So in the Paddington example, if you can't afford that, look at Red Hill. If you can't afford Red Hill, look at Ashgrove. If you can't afford that, look at Annerley, and keep going to the next suburb along until you can kind of get to where you can afford. A couple of good tools we like to look into these places. It's a tool called Walk Score. So when you find the property or the suburb, it gives you a good overview on the shops, the transportation, the shopping centres in the suburb, and really gives you a good overview, because you might not be familiar with a suburb that's a bit further along from where you used to being, but at least, like Nathan said, it's a stepping stone. It's getting you in, it's getting to the market and helping you move on. So what are some factors, Nathan, that you can look at to drive property values?
So I think it's about finding the property that is one in an area that you believe is well positioned. So as I say, location, location, location. That's pretty much everything with property. So getting in a property that has decent public transport, close to shops, in a good public school catchment. These are the things that we generally find entail growth. Now, doing research on the area is also wise. So we provide clients with RP data information on CoreLogic, which is statistical data on suburbs, as well as give them more insights into each property.
So on this, I think also we've got a couple of tools on the screen there. So definitely look at SQM Research and DSR. There are a couple of score type analytics software, which can really help you with the supply and demand in the suburb. But something we definitely look at, like you can see on the screen there, is the National Property Clock. So just walk us through that one, Nathan.
So if you jump on HTW, so herontoddwhite.com.au, htw.com.au/month in review, you can get this one. It's free data. And Heron Todd White, they are Australia's largest property valuer. So each month they have statistical data from their valuers, and they release a report, as you can see here, which gives us an understanding as to where the property market is going. So we all know property goes through a cycle. So we can see the clock there. The market peaks, then it declines, it bottoms out, and then it rises. So each segment of the market, you've got every suburb, Brisbane, you've got Gold Coast, you've got all the capital cities and areas in Australia where you can see the property market is trending. So in a rising market where Brisbane is at the moment, your negotiation on a home, so this is for houses, of course, will be very different because there's more competition in a rising market because there's less supply, more demand, which is pushing prices up, as to what your negotiation might be in Sydney. As you can see there, it's in a declining market where there is more supply, less demand. So you've got to be very strategic in the way you approach things depending on where the market's going.
Speaking of, so there's obviously two major methods of buying. There's private treaty or there's auction. So just take us through private treaty, probably one of the most common ways of buying in Brisbane, and what that process looks like.
So in Brisbane, we're lucky enough that we can put finance clauses in contracts. So generally speaking, you'll go to an open home. If you like the property, you'll ask for a contract to sale. You put your offer down. It goes to the vendor, which is the seller. They'll look at it and they'll either say yes or no. So when purchasing in this style, there's no such thing as Dutch auctions or silent auctions. What that means is if there's more than one person putting an offer down or there's a lot of interest in the property, the real estate agent will generally say, look, we've got a lot of interest. Everyone put your offer in by this date. It's first and final. So you get one shot at it. You can't go back and forth. Everyone puts their offer in. There might be 5 different offers. The vendor, the person selling the property, will review them all and then pick the one they like. So that can happen. If there's no competition, well, once you put a contract in, it's just between you and the vendor to go back and forth until something happens. So just remember, depending on how competitive the market is, you might find yourself in a multiple offers situation. That's where you're going to put your first and final down, and you'll need to be competitive from a offer point of view.
I think the point with this one is don't be afraid to negotiate. Just because they're asking offers over 500 doesn't mean you can't put in an offer at 470,000. Like Nathan said earlier, it's more in Queensland, especially about the terms. So maybe look at putting shorter finance terms, putting a faster settlement date, because those things, sometimes to the vendors, the sellers, they don't really care. $10,000 doesn't mean much to them, but settling a week early actually means a lot.
Yeah, so understand the market. The other thing I'd suggest is when you go to the open home, get there at the start of the open home, stay for the full 30 minutes if you like it. Open homes are usually only open 30 minutes. The reason why you do that, you want to see the number of people going through the property. If there's 30 people going through it, you know for a fact it's going to be competitive. Of the 30, there might be 5 people wanting to put an offer. So you'd negotiate very different in that sort of an environment, as opposed to you go in there, it's just you.
It's crickets.
Crickets. It's just you. No one's there. Well, I'd put that low ball offer in if no one's around. If there's people around, you get in multiple offers, you're probably not going to get much luck if you're lowballing in that sort of environment. So understand the motives, talk to the agent, understand why they're selling, and then mold your offer around what's important.
So the second method of buying, auction. Talk us through this. Obviously, it's a different approach, a different strategy. What do you need before you get an auction?
Definitely get a pre-approval if you are going to auction. remember, you don't get any finance building a pest. You get no clauses. You are unconditional. You have to buy the
own
property.
the property at the drop of the hammer.
That's right. However, having said that, a lot of first homeowners won't go to auctions. So we do see some properties that get passed through. So a simple way, I've had a first homeowner recently do this. They register their interest in the auction. The auction started. No one bid. They, being registered bidders, were the first to be offered a chance to negotiate post-auction. So don't be put off by auctions. You can get pre-offer bids in prior to the auction. That might be accepted. Even if you go to auction and you bid, you do all your due diligence with your broker beforehand to make sure that you have confidence and to reduce as much risk as possible that you wouldn't get your finance through. So I think it's a good point, probably something to speak further with your broker and get a good understanding around. We do find a lot of first homeowners won't even bother going to auction.
And then, so this is one of my favorite parts is dealing with real estate agents. So, you know, a lot of people are kind of afraid to deal with real estate agents. It is something that can be a bit unsettling. It is something that people feel like they should be a bit rude, or some people are actually too open with real estate agents. So what are some tips, Nathan, that you can take us through there? You know, I think first and foremost, I guess I'll start it off, is one thing that a lot of first home buyers and buyers in general don't realize is that the agent isn't working for you. The agent is paid by the vendor, the person selling the property, to sell the property. They're not paid by you. So a lot of people get a bit too comfortable. They'll tell them how much their proof of finance. They'll tell them how much they've got for deposit, which is giving that agent more and more intel to be able to tell the person selling the property if you're a good person to be buying. So I think that's something important to remember, that you can use them. You can ask them a lot of questions, which we'll get to in a second. But remember, they're not paid by you and they're not working for you.
That's right. To push your bid as high as possible, and they're working for the vendor. So I think that is extremely relevant there, Jayden. You can also rely on the agent. If you've got a very specific criteria on property, get the agent, tell them what you're after. If the property you're interested isn't of interest, and they might have stuff that's off the market, that's coming up, that they'll love to show you. So the agent can help you as well. Be guarded with the information you give financially to them. However, you can let them know what sort of property you're after and, you know, which sort of areas, and they might have stuff that's not even on the market yet to be listed.
The other point we had there is, you know, agents are paid commissions and they don't waste time on tie kickers. So when you go there, make sure you're prepared, make sure you're organized, and you don't look like, you know, some people just go there and say, no, I don't have approval, I'm just having a look. And then when they eventually put an offer in there, the agent won't take it seriously. So that they actually can move the needle in terms of getting your offer over the line. And even like the last point there, although a lazy agent might ignore you, they can actually be your best friend, because then they've actually annoyed other buyers. And if you stay out there, you can get your offer through and get your offer settled, possibly for a lower price than would have otherwise been. So I guess, you know, the next slide along, dealing with agents, the more the agent likes you, the more info they're going to give you. So find out lots of questions, ask lots of questions from the agent. Simple stuff like, how long has the property been on the market? Have they had other offers? Why is the person selling the property? Where are they moving? It's all little questions like that that you can find out. You know, have there been issues with the property? Is a building and pest inspection report done? They might not necessarily tell you that stuff, but even if you get a little bit of information, you can use that later on when you're negotiating to try and get the price down potentially.
Yeah, even finding out how long it's been on the market, that can help as well, because the longer it's been on the market, the less interest you'd find, because generally properties in the first 2 weeks hit the peak of interest and then it slowly drags out. So if it's been on the market for 3 months, why hasn't it sold within the first 2 weeks? What's going on? Yeah. Is the owner unrealistic on the price? And most agents, after, you know, at the end of 3 months, that's when they're about to lose a listing, because they've only usually get a 3-month sign up for exclusivity, and then it rolls over, or they might find another agent. They might give you some good info that they might just blurt out.
They're moving into state, or their finance terms are running out, or they need to sell it because they bought somewhere else. Stuff like that is critical. Now, the point at the bottom there, I can't stress this enough, is don't give away your finance terms to the real estate agent. Because if you tell them, I can buy up to 500,000 and the property's listed for 475, they're going to know they can push and push and push you up to get more money for their buyer.
That's right. Yeah. So, and I mean, the best thing is just say you're pre-approved, finance is good to go. I'm a serious buyer. I want to buy.
That's all you need to say.
Let's talk turkey.
So Nathan, talk us through a couple of free resources that you can give, and how do you help first home buyers in this process?
Yeah, I think RP Data is an excellent tool. I mentioned it before. It's Australia's largest property reporting software. This will give you intel into sales within the area, like for like properties that are selling, an appraisal as to what the property might be worth, and give you a better understanding as to what that price might actually be. Because in a competitive market, you'll start to see just for sale on realestate.com. They don't put prices on it, or properties go on auction. This software, RP Data, will save you a lot of time, because you don't want to be going to, if your budget's $500,000, $600,000-$700,000 properties that are coming up in
more, where they're putting properties in a lower price bracket to get lots and lots of interest and get you inquiring, but then you could end up spending $500 in a building and pest report for a property that's going to sell for $200,000 more. Yeah,
so there's no point wasting your time going to those properties if they're not in your price range. So yeah, definitely email us if you'd like a property report. There's no cost for them, and it'll just save you a heap of time.
So Nathan, just a bit of a recap, going back through, what would be your 5 key points from today?
So I think being prepared, that's like the most important thing. So it's great that you've joined us. Continue to understand what your budget is. Know what your repayments you'd like to achieve are. Keep saving that deposit. That's important. Slow down on any credit applications. I'd say, in fact, don't do any. And in the lead up, get very specific as to what property you're after. Because once you start looking, you don't want to be like me. I was a prime example where it took me 12 months to find the right property. You want to be specific. You don't want to know exactly what you're after so that you can make it happen.
And then, so Nathan, if anyone wants to get in touch or get an RP Data report, what are your details?
Yep. Give us a buzz. My number here, as you can see on the bottom of the screen, is there, and my email also. So you can call me or email me, and we can take it from there. But certainly happy to sit down and have a bit more of a chat about your situation.
Okay, and we've got 2 questions we've only got time for, because we're just running out of time. Marco's asked, I've read that there are certain jobs that can have lender's mortgage insurance waived. Can you help with that? And what are those jobs?
Yep. So the lender's mortgage insurance waiver are for specific occupations. The 3 are health, legal, and accounting. So if you're a lawyer, if you're an accountant, if you're in a health industry, so doctors, specialists, and a whole different physios, there's a whole heap of categories. Touch base with us. We'll go through your occupation and find out if we can get that mortgage insurance waived up to 90%. So it's awesome. Saves thousands of dollars. And definitely ask that question, because if you don't know about it, you might not necessarily get it.
Okay, and we'll take one more question from Sarah. She's asked, does shares count as genuine savings? So maybe explain what genuine savings are and if they do.
So genuine savings is cash saved in your account for 3 months. The banks will be after 5% of the purchase price. So on a 500 purchase, that's 25,000. Having shares, provided you've held them for 3 months, is an acceptable form of genuine saving. So as long as you can show 3 months history,
Sarah, go for it.
That's fine. So absolutely, that could be utilized for that there.
Okay, just conscious of the time. So, guys, we're going to wrap it up there. Thanks so much for tuning in. Appreciate you for listening this far. If we didn't get time for your question, sorry, we'll get to it on email in the next sort of 24 hours. But if you want to get in touch, obviously, our details on the screen there again. Nathan's happy to do free RP Data reports, or even just give you a bit of advice if you need a bit of help. So anyway, get in touch, and that's all from now. So we'll be, talk to you soon.
Thanks, guys.
Thanks. See ya.
Bye.